how AI is reinventing digital money security. In a world where digital payments happen in the blink of an eye, protecting your money has become more complex than ever before. What if your payment app could detect fraud before it happens? What if machine learning could spot a scam based on patterns humans would never catch? Today, we're diving into the hidden world of AI in payment security. How artificial intelligence isn't just speeding up transactions, but changing the very way digital money stays safe. From stopping scammers in real time to making cross-border payments smarter, this is the future of secure digital finance. Let's get started. As of 2026, artificial intelligence has shifted from being an exciting experiment to a core engine of payment systems worldwide. According to recent industry analysis, the AI in finance and payments market is projected to grow from around $38 billion in 2024 to well over $190 billion by 2030. A clear testament to how indispensable AI has become in secure money transactions. As of 2026, artificial intelligence has shifted from being an exciting experiment to a core engine of payment systems worldwide. According to recent industry analysis, the AI in finance and payments market is projected to grow from around $38 billion in 2024 to well over $190 billion by 2030. A clear testament to how indispensable AI has become in secure money transactions. In the early days of digital payments, speed and convenience were the top priorities. But as more money flows through digital wallets, mobile apps, and online platforms, security has become a dominant concern. Users are now demanding seamless experiences that are not only fast but also free from fraud and unauthorized access. AI tools are stepping in to meet that need, not merely as protective add-ons, but as the primary shield that stands between legitimate transactions and emerging threats. This transformation impacts both businesses and consumers. For businesses, AI improves operational efficiency, enhances user trust, and drives revenue by reducing fraud losses and false declines. For consumers, AI makes paying safer, more intuitive, and in many cases, personalized. Where payment suggestions, risk warnings, and fraud prevention happen automatically without disruption. At the heart of this revolution is machine learning, a subset of AI where systems learn from past data to recognize patterns, including those linked to fraud. Traditional rule-based fraud detection systems were often static. If something didn't precisely match the rulebook, it would either be ignored or falsely blocked as fraud. But today's machine learning models analyze patterns dynamically, adapting and learning with every transaction they process.
For example, when a user makes purchases, the AI watches two key aspects. First, it compares the transaction against expected behavior, what the user typically does based on past patterns. Second, it examines global fraud patterns behaviors flagged across thousands or millions of other payment instances. This combination helps detect signs of fraud faster and more accurately than any rule-based system could.
This means that when a payment looks unusual, like logging in from a different location, a sudden spike in spending, or a suspicious device fingerprint, the AI system sends alerts, flags the transaction, or even temporarily blocks it. All of this happens in milliseconds, often before the user even realizes something is wrong. The result is twofold. Fraudsters are stopped in their tracks before they can steal money, and legitimate users enjoy frictionless payment experiences, reduced false positives, and smoother flows. The balance between security and convenience is what makes machine learning so vital in contemporary payment systems. One of the most impressive features of AI in payment security is real-time fraud detection. Machine learning models are trained to identify anomalies, deviations from normal patterns, as they occur. They look for unusual transactional behavior, purchases made at odd times, multiple rapid transactions, en familiar marchand category, or login from foreign. If something doesn't align with what is typical for a user, the AI can intervene immediately. This isn't just theoretical. For instance, modern payment systems using real-time AI scoring have been shown to significantly reduce false declines, transactions legitimately made but falsely flagged as fraud by up to 20 to 30% in certain environments. This matters because when legitimate payments are blocked, users may abandon a purchase altogether, and a significant number of them never try again after a false decline. With AI, the system doesn't just rely on preset rules. It continuously learns from every new transaction and fraud incident. Over time, its predictions become sharper, its insights more precise, and its ability to distinguish fraud from normal behavior stronger. This adaptive capability is critical because fraud tactics evolve constantly. What worked to deceive systems yesterday might be obsolete tomorrow. Machine learning doesn't just look at transaction amounts or locations. It evaluates behavioral patterns. These patterns include how users interact with apps, how they type or navigate screens, the cadence of their spending, and the typical size and timing of their purchases. This level of analysis, sometimes called behavioral biometrics, adds a powerful layer of security. AI systems establish a baseline profile for each user, a kind of digital fingerprint that represents normal activity. When a transaction deviates from this baseline, say a large purchase when passed, behavior points to small daily spends, the AI flags it for review. This approach is far more personalized and context-aware than traditional systems, which might treat every deviation the same regardless of user history. In fact, some cutting-edge fraud detection solutions incorporate behavioral signals like device usage, session movement, typing rhythms, and even how users interact with graphical elements on the screen. These microscopic signals help detect sophisticated fraud attempts that would otherwise slip through conventional security measures. One of the biggest challenges in fraud detection is balancing security with user experience. If a system is too aggressive, it can block legitimate transactions, frustrating customers and hurting business revenue. If it's too lenient, fraudulent transactions slip through the cracks. AI's adaptive predictive models solve this dilemma by assigning dynamic risk scores. Instead of a binary approve or decline, transactions are evaluated on a probability scale. If risk is low, the payment proceeds without interruption. If risk is medium, the system might request additional verification, like a one-time password or biometric check. If risk is high, the transaction is blocked or escalated for manual review. This nuanced approach dramatically reduces false positives, legitimate transactions, wrongly flagged as fraud, while maintaining strict protections. In some reported cases, AI-driven risk scoring led to significant declines in false positives, which in turn improved approval rates and increased user satisfaction. Security systems today aren't limited to simple pattern recognition. They leverage advanced techniques like deep learning, ensemble model, and graph-based AI models don't just look at single transactions. They examine the network of relationships between accounts, devices, locations, and merchant endpoints. This network approach helps uncover fraud rings, networks of accounts working together fraudulently that might look normal when examined individually. Graph AI can identify coordinated patterns across vast networks that rule-based systems would miss. For example, a network of accounts using slight variations of similar behavior might appear safe in isolation but clearly suspicious when analyzed jointly. Graph analytics exposes these linked behaviors early, allowing the system to intervene before fraud spreads. Integrating graph-based detection with deep learning, models that learn hierarchical features from data, creates multi-layer defense systems that adapt in real time to evolving threats. This layered approach adds robustness to fraud prevention, ensuring that even sophisticated attacks have a harder time slipping past detection mechanisms. AI isn't working alone. It often collaborates with other technologies to fortify payment security. Blockchain, for instance, provides an immutable ledger for transactions. Its transparency and resistance to tampering make it hard for fraudsters to manipulate or alter records. When AI detects a suspicious pattern, blockchain ensures that any audit trail or transaction history can be verified easily, enhancing trust and integrity. Biometric authentication, such as fingerprint scans, facial recognition, or voice identification, adds another layer of protection. When AI systems recognize suspicious behavior, they can trigger biometric checks, ensuring that the real user is behind the transaction. This combination of machine learning and biometric verification makes unauthorized access even harder for attackers. Fraud detection isn't just about stopping criminals. It's also about complying with global financial regulations like anti-money laundering (AML) and Know Your Customer (KYC) rules. AI is uniquely suited to these tasks because it can process enormous amounts of transaction and identity data quickly, spotting suspicious activity that might indicate money laundering or hidden fraud schemes. In compliance monitoring, AI systems conduct continuous AML screening, identifying high-risk transactions in real time. They also adapt to new regulations and threat patterns automatically, reducing the need for manual rule updates. This real-time regulatory alignment protects businesses from fines, reputational damage, and operational risks. As digital currencies and international payments grow, AI's role in securing cross-border transactions becomes even more critical. Traditional cross-border payments can be slow, expensive, and prone to errors due to differing regulations, exchange rates, and intermediary systems. AI streamlines these payments by optimizing routing, predicting currency fluctuations, reducing latency, and ensuring compliance with international rules. Moreover, as central banks explore digital currencies, like the digital euro, AI models will be used to score transaction risk, prevent fraud, and protect digital money on a national scale. AI has not just enhanced the way we pay, it has reinvented how digital money stays secure. Machine learning, real-time risk scoring, behavioral analytics, graph models, blockchain integration, biometrics. All these technologies are converging to create a future where fraud detection is proactive, adaptive, and incredibly accurate. The era of static rule-based security is over. In its place stands a world where digital payments are smarter, safer, and more reliable thanks to AI. Whether you're a consumer sending money or a business processing thousands of transactions per day, AI is playing a silent but powerful role in protecting your digital finances. If you found this video insightful, make sure to like, subscribe, and hit the bell for more deep dives into how AI is shaping the future of money. Comment below, what AI payment security feature surprises you the most?